This one, South Africa could move towards an even deeper junk credit rating this evening when Moody's and S&P Global release their ratings reviews of the country. South Africa already has a sub-investment grade with all three major credit rating agencies. A lower grading means it's seen as a riskier country to lend money to or invest, basically. Business editor Devin Morgan is joining us now. Hi, Devin. So we are already in junk status. Why does it matter what happens tonight?
Dan, good morning. Well, first of all, let's answer the first question. Chiefly, what does a ratings agency do? Basically, above all things, it assesses a country's ability to pay back debt. Now, it looks at whether the country is financially healthy and has a sustainable outlook to keep it that way. Now, as you know, South Africa's economy has had anemic growth for years, which brings us to where we are today. This is the situation with the credit rating agencies, Dan. We are in junk status with all three of the major groups, S&P Global, Fitch Ratings and Moody's. And the main reason that we are concerned about this particular status is that if we go further into junk, all it does is that it makes our borrowing costs all that more higher. And I need not tell you, with our debt situation at the moment, the last thing we want is to pay more to borrow money. If you want a further explanation on exactly what that means, just Kevin Lings from Stanlib.
It would help us enormously if we had a better credit rating, even if it was just one notch higher, because in all probability that interest cost would start to ease off.
Okay, Devin, so what does it mean now? What would be the main considerations, for example, as they evaluate us this morning? And I just saw on that graphic the outlook stable, negative. Are we going to get more negatives? I mean, what do they consider?
Yeah, that's the key. It's interesting you're bringing out the outlook, because what would be a frightening scenario here, Moody's, who kept us on investment grade for such a long time, in fact, they were criticized for that, while the others were sending us into junk status, their outlook is negative, which means a next move could very well be an actual downgrade. But let's get to your question. What we want to do is stay on a path of economic recovery, because that basically signifies a healthy state. The coronavirus certainly had worsened our prospects. We have the reconstruction and recovery plan in place that might impress the credit rating agencies. There's also a concerted effort to increase investment, but to look at the criteria that's needed for us to actually escape this rather precarious situation we're in. They would look, Dan, to answer your question, our growth prospects of the country. Are we implementing growth-enhancing policies? And clearly, a lot of people in the fraternity will tell you we're having a very hard time doing that. Spending, and I need not tell you what's the biggest bugbear there, wages, public wages. South Africa, as Fitch says, has a very difficult time convincing labor unions to agree on a particular wage pattern. It's in court at the moment. Huge part of our wage bill. It affects our fiscal health, if you like. And then I need not tell you there's the issue of debt. Is debt going to rise? We already see from the latest budget coming on to the end of the year, 95% of GDP as we reach 2023. That's a frightening scenario. Here's Kevin Ling once again on some of those big factors under consideration.
The fiscal position, the fact that government debt was rising at a rapid pace, the fact that we were not generating meaningful increase in economic growth, job creation had all but disappeared, that the institutional capacity within government had deteriorated, that the state-owned enterprises represent an ongoing fiscal risk for government, that contingent liability that they represent has become substantial.
Yeah, so there you have it. Kevin Lings just outlining what would be on the table for consideration this evening, Dan. Usually they release these publications after the markets close, anytime between late afternoon to late evening.
Thank you very much, Devin Morgan, our business editor here at eNCA. We'll find out later tonight. More junk status or not? Oof. Okay, that's where I end for this.